And I think one of the main reasons why everyone is talking about CoreWeave stock is because of its phenomenal growth rates and because it's operating inside the artificial intelligence industry. And AI stocks have been the most popular types of stocks over the previous 2.5 years now. So I wanted to go and dig deeper into CoreWeave's latest quarterly performance update so that investors can have more information about this incredibly fast growing business.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So if you didn't already know, CoreWeave delivers an integrated full stack observability feature giving researchers immediate feedback to diagnose the factors impacting performance and the reliability of their AI workloads from the data center through network fabrics and storage GPUs and up to their machine learning code. Businesses are investing aggressively in artificial intelligence. As some of you might already know, I follow 200 to 300 companies regularly, evaluating their quarterly earnings updates and going through their conference calls and learning about what they do and the demand for their products and services. And nearly every company wants to have some kind of AI strategy if they don't already have one. And their AI strategy, in most cases, includes large investments in increasing their artificial intelligence capabilities. So, regardless of the type of company I'm evaluating, and I cover stocks from Coca-Cola and Pepsi to companies like Nvidia and AMD and Tesla and Rivian, all of these companies want to develop artificial intelligence for their business. They want to have that capability. And nearly every one of these companies is spending large sums of money to develop that capability. And that's circulating throughout the industry, creating this surge in demand for these kinds of products and services. So, one of the things CoreWeave recently started doing and will increase more significantly is to introduce flexible capacity products to help their customers better manage their end customer demand. They will introduce additional capacity for this product over the second half of the year. And if you're a business owner, you probably understand this situation. But for those of you that are not business owners and you work for a company and you're earning a regular weekly paycheck, it might be interesting for you to learn this as well. Businesses have some decisions to make. For instance, they can make a decision to have the product or service they want in-house at a fixed rate. For instance, a warehouse. They can purchase the land and build the warehouse and own and operate that facility. But that will require a large investment to put up all that money up front to buy the land, to build the warehouse, etc., etc. Another option a business has is to rent that service. So they want that warehouse, and instead of buying the land and building the warehouse, they can rent it from a business that provides that service. And CoreWeave is that business that provides services to other enterprises so they don't have to put up that large capital investment. CoreWeave is spending that large capital sum. Right, this year, CoreWeave told investors they plan to spend $20 billion on capital expenditure. $20 billion for a company like CoreWeave that just generated 1 billion in revenue, roughly 1 billion in revenue in its most recently completed quarter. So CoreWeave spends the large sums of money to build these facilities and then rents them out or sells them at different ways to fit the needs of different businesses that may not want to, that may choose not to put up that large capital investment. So for every business, this situation is different. There is no clear winning strategy where you can say, well, if I had the money, I would build this myself and own it rather than renting it. That's not the case. It's not always that is the best decision. That's not always the case. Sometimes it's more cost effective and more competitively advantageous to rent out whatever the service might be. And that's across the board, whether it's warehouse, whether it's logistics, whether it's uh, back end infrastructure, whether it's marketing, whatever the case might be. There is no clear-cut answer that says, oh, if you always do it like this, if you always have it in-house, it's always better. It's not the case. You have to evaluate the decision based on your unique situation and what fits best with your business model. And that's why this offering from CoreWeave will create additional demand for its products and services, which are already soaring, because it's going to offer its product in a different way, and certainly that different way will meet the needs of certain enterprises that want to purchase this in this kind of way. And so that's always helpful for a business to be able to offer your customers different types of purchases, different types of ways to purchase your product. And this will certainly be another catalyst for a company that's already experiencing so much demand for its products already. The management team saying that their product development roadmap is robust, and we are excited to announce new cloud services and capabilities over the remaining of the year that will further accelerate growth within the AI ecosystem. We priced both of our inaugural and second high yield bond offering in the past 3 months. So let me take these one at a time. Their product development roadmap, this, for me, also, again, it's those situations where it's not always a clearly good sign for a business to continue developing new products. Sometimes it might be the case where it's more effective for a business to focus on its core and give all its energy and attention to that core, because that's the category where it can sustain competitive advantage. And these new products that the company develops may or may not turn out to be positive for the company longer term. That being said, when you're in an exciting industry that's experiencing such significant growth like artificial intelligence, and you have some capabilities that you can take advantage of by offering new products utilizing existing capabilities, it has potential to work out really well. And in this industry, I lean in favor of these types of strategies. Try it out, right? Because there's so much demand in this industry that the chances that it generates a good return on invested capital is pretty high. Okay, the next thing, they priced both of their inaugural and second high yield bond offering in the past 3 months. That's very positive for investors. If you've been around my channel, I've talked about this several times. And when you start a new business, you can finance your business in two ways, either with equity or with debt. You can either use existing cash or you can borrow the money. If you use existing cash, you can either use your own cash or somebody else's cash. And in which case, if you use somebody else's cash, you have to give them a piece of the business. That's equity to fund your business. Or you can borrow money to fund your business and growth in your business and not give up a percentage of the business to get that money. Okay. Almost in every case, the cost of debt is lower than the cost of equity. Almost in every case. There are situations when a company is highly indebted and that incremental debt is much more costly than the incremental equity. But in most cases, and certainly in the case of CoreWeave, the incremental cost of debt is much lower than the cost of equity. So what this does, this opens the market for CoreWeave and allows the company to borrow money at a lower cost or raise money at lower cost, which they can then use to fund their significant expansion. And their growth is significant. So they're borrowing money to support those growth ambitions. Great news here for CoreWeave stock investors. So much positive going on for this company. By the way, this document I'm reading from is the company's most recent earnings call transcript when they held a conference call with Wall Street analysts. I've made this document available for my channel members, the highlighted version with my insights, right? When I highlight them, it's because these are the things that I think investors need to know about if they don't want to go through the full 30-page document like I go through. You can read the highlights of these, and I have this for dozens and dozens of companies that I'm uploading regularly. So you can join my channel, less than $5 a month. See the link in the description for all the benefits you get as a channel member. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.